What is the best tax-free savings account in South Africa? There's a lot of hype around tax-free savings accounts in SA, and understandably so. We all want to pay as little tax as possible. But all things considered, are tax-free savings products really the best way to maximize your overall investment growth? Or can you do better elsewhere? Before we answer that question, let's discuss how tax-free savings accounts work and which of these tax-free products are likely to give you the best investment return.
As you can see, African Bank offers the most competitive interest rate, with FNB and ABSA taking second and third place. Now it's important to note that these are all fixed rate products, which means that the return is a guaranteed return. Of course, the advantage here is that you know what return to expect, but the disadvantage is that the rate of return is capped. Fortunately, there are some other options available, which, whilst a bit more volatile, are likely to offer a better performance in the long run. Have you checked out our YouTube or Patreon memberships yet? For as little as 30 Rand per month, you get access to investment spreadsheets, powerful business and finance guides, estate planning templates, property and Bitcoin investing courses, as well as email consulting. Find the link in our bio.
Many financial institutions offer tax-free index funds or ETF products. The beauty of these products is that you get exposure to the stock market or other asset classes, many of which have historically produced far greater returns than keeping your money in the bank. Some of the funds on offer even give you offshore exposure, meaning that you protect your investment against any weakness in the value of the rand. One of the largest ETF providers in South Africa is Satrix. They offer loads of tax-free ETF options across both local and global markets. Take a look at their website for more information on their product offering. But if we look at one of the S&P 500 ETFs as an example, you will see that it has returned a very healthy return over the past year, and even higher returns over the past 3 and 5 year periods. Remember that past returns are never a guarantee for future returns, and these returns are going to be more volatile. But ETF-based tax-free savings products are a great way to potentially increase your investment return. If you'd like to get started with a tax-free ETF, we suggest taking a look at Easy Equities. They have loads of options, including the Satrix ETF products, and they're one of the most beginner-friendly brokers around.
Now that we've seen the returns generated by the tax-free products, let's discuss how they work. Pretty much every bank and investment broker today has at least one tax-free savings product on offer, and some in fact have several different product options, which we'll discuss shortly. Now the beauty of a tax-free savings product is that any returns on the money, including interest, dividends, and capital growth, is completely tax-free. But there are of course some restrictions. These accounts have an annual contribution limit of 36,000 Rand, meaning that you can only invest 36,000 Rand each year in a tax-free savings product. Anything more than that and you'll be heavily penalized. As it stands, these products also have a lifetime contribution limit of 500,000 Rand, which, if you invest the maximum of 36,000 Rand allowed per year, it'll take you around 14 years to reach. Both the annual and lifetime contribution limit is shared between any tax-free savings products you hold. If you choose to open two different tax-free products, for example, your annual contribution limit remains at 36,000 Rand, which you can share between those two products as you wish. Importantly, withdrawals from these accounts are strongly discouraged. Even though the funds are usually quite accessible depending on the account, any withdrawals you make can't be put back into the account without affecting your contribution limit. So a long-term investment outlook is the name of the game.
Now, at the start of the video, we hinted there might be a better way to invest your money. Let's unpack this. In recent years, tax-free savings accounts have received a great deal of publicity. Everyone is talking about them, and the financial industry is heavily promoting them. The prospect of getting a tax-free return is hugely attractive after all, but many investors appear to be too fixated on the idea of tax-free returns rather than the more important issue of maximizing return on investment. Too many investors are happy with a mere 7 or 8% return in the bank, whilst the real rate of inflation is much higher than that. And this means that investors are losing purchasing power. Their money is slowly evaporating. So even if you take full advantage of the tax-free savings system, if you are not getting at least 12% return each year, you're in serious trouble. Bitcoin has returned an average of around 60% growth over the past 5 years. It has been the best performing asset in the past decade. And with huge demand from institutional investors and governments alike, the next decade looks set to be even better. With a return like that, even if you have to pay the maximum rate of tax on investment returns in future, you're still likely to outperform most other asset classes.
But here's the thing, you don't need to limit yourself to one or the other. You can invest in both. If you're nervous about investing in Bitcoin, you may want to start small. And to dip your toe in the water, if you use our referral code when you buy Bitcoin on LUNO, you'll get up to 200 Rand in free Bitcoin, no strings attached. Simply buy 500 Rand worth of Bitcoin and your free Bitcoin will be deposited into your account in 30 days. If you'd like to learn more about investing, join our membership program for as little as 30 Rand to get access to investment spreadsheets, powerful business and finance guides, estate planning templates, property and Bitcoin investing courses, as well as email consulting. The link is in our bio. See you over there.